Good afternoon. At least for me, it's Michael Hessian from the
Asset.
Here we go. Let's try that again. I was trying this microphone and it didn't work. So welcome to live stream number 2. Michael Hessian checking in from cold New England. I'm in Rhode Island, and welcome to my live stream. So today I'm going to talk about a little deeper dive into what I specialize in, which is something called infinite banking concepts, and using a certain type of whole life insurance as a savings and liquidity vehicle. So let's dive right in. So first, are you tired of feeling like your savings are at the mercy of the unpredictable markets, or frustrated by poor savings environments like the banks that fail to help your money grow and even keep up with inflation? So what if there was a way to grow your wealth securely and access it when you need it and never worry about market downturns again? So in this video, I'm revealing a strategy that savvy business owners and banks use to take full control of their savings and build lasting financial independence. So let me introduce you with a story. Let me introduce you to Sarah, who's a 42-year-old business owner who runs a thriving interior design company. Has always prided herself on her financial savvy and being on top of things. So like many professionals, she put her savings into the stock market, hoping it would grow faster than traditional savings environments like a savings account. And unfortunately, in 2020, the market downturned and she lost about 25% of her value. And right around that time, she needed $50,000 to seize a major business opportunity, which was actually a chance to buy out one of her biggest competitors. But pulling money out of the market during a downturn would have really locked in those losses. So it was not ideal by any stretch. So she realized that she needed a better way to save her money, something stable, predictable, and always accessible. And that's when she discovered whole life insurance and the infinite banking concept. So today, let's explore how her journey can help you understand why this strategy could be a key to your financial independence. So first of all, why is it that relying on the stock market for savings is risky and unpredictable? Obviously, the volatility makes it hard to predict when your money will be available without losses. A lot of people are in the market just with their retirement accounts, so they're not necessarily thinking about it as a near-term savings. They're thinking about it more as a long-term thing. But even in that case, you have to hope that when it comes time to retire and you can start tapping into that money, that there hasn't been a big downturn and you haven't lost a huge percentage of the value within your 401k or retirement account. Selling investments during a downturn locks in losses and reducing the value of your savings, and there are no guarantees. The market does whatever it does, and you have no control over it. And that's why the industry, those who tout the being in the market, always talk about average rates of return, which doesn't really mean much of anything. It's just an average over like a 40-year period of time. It doesn't take into account all the timing issues. So back to Sarah. So when she needed that $50,000, she felt trapped. She told her broker, the broker told her that it'll bounce back eventually, which is what they all say. And she realized that the stock market was not the right place for her savings, and not for emergencies or opportunities. And she needed a solution that wasn't so unpredictable. And being only 42 and not having any sort of notion of retirement, she needed access to that money. So the second point is whole life insurance as a secure and predictable savings vehicle. So guaranteed growth regardless of external conditions. So these whole life insurance contracts have guarantees that are more robust than a typical savings account. And in the long term, they have much greater opportunity for compounding interest growth. And the principal is protected and ensures that your money will never decrease in value. The long-term stability and built-in wealth transfer through the death benefit. So back to Sarah. So after her market experience, she learned about this whole life insurance. She discovered that as a savings vehicle designed for stability, offering guaranteed growth every year. And when she set up her policy, she realized she could grow her savings while knowing that it was always going to be there when she needed it. And unlike her stock investment, she didn't have to worry about losing any money. So number three, liquidity benefits, access cash value anytime without penalties or market dependency. It gives you immediate access to funds without penalty or waiting periods, flexibility to use the money for emergencies, investments, personal goals, whatever you want. There are no restrictions for accessing the cash inside these whole life insurance products. And there's no market dependency or credit checks. These are private mutual life insurance companies that do not have shareholders. They don't have a stock price. They're not affected by that. So in Sarah's case, she started to build cash value, and she had access to her savings at any time. And about a year after opening the policy, she used it to finance that $50,000 business financing option. So she didn't have to go to the banks asking for 50 grand to start that business or purchase it. She was able to use her own money that she had built up over that year's time. And then now she had this great business to go forward with. And the fourth thing is the added layer of guarantees and stability that whole life insurance offers. So the fixed interest rates that are guaranteed inside the cash value with reliable growth, dividend payments from mutual companies. So dividends in the mutual life insurance world is a bit different than in the stock world. It means that the companies, these mutual companies, have done a good job of growing their business and they're profitable. So what that means is they share the profits with the policy owners. And how we set it up ideally is to have that simply buy more life insurance. It's automatic. You don't have to worry about it. It keeps it tax advantaged and helps the whole thing grow. And certainly protection from external risks like market downturn and inflation. So today, Sarah's policy continues to grow. She continues to pay her premiums, and she has the ability to replenish the loans that she took. When you access the cash inside of these things, you don't pull the money out. You take loans collateralized by what's in your cash value, which gives you the opportunity to act as your own banking system. So you take loans out from your own system, get what you need, and then replenish it. And the thing is, you don't have to replenish it. You don't have to pay these loans back. These are these types of loans with the life insurance company are not, you don't have to pay them back ever. It works best if you do, but you don't have to. So you have much greater control. So she now really, Sarah enjoys the peace of mind that this money is constantly growing on a monthly basis, and she can always tap into it and as she needed for her next endeavor. She's going to buy some equipment purchases or whatever the case might be. So it gives her this peace of mind, and she actually can move forward just knowing that she's is not liable to market swings. This is really important too to keep in mind. When you set these policies up the right way, what you use the money for, it doesn't really matter. It can be for investments. I've got clients who are crypto investors who have their whole life policies doing their thing, growing guaranteed, and they'll take loans out of it to buy more crypto when a certain the market dipped to a certain level and it was a good time to get back in. But rather than just using cash, they took a loan out from their life insurance policy to put it into that other asset, which you can certainly do. So it's the idea of, think of it as you put your money as much as you can into this growing guaranteed asset, the whole life insurance contract, set up the right way with the right help, with the right life insurance companies to then do whatever you need to do or whatever you want to do with it. No questions asked. So what can we really learn from this story about Sarah? And that is, the stock market can be great for long-term investments. It's not really where your savings should be. And if you are going to invest in that, I would encourage you to put it in through these policies. Think of these policies as a sort of a line of credit savings account that you control and that grows, and use it for whatever you need to do. And whole life insurance provides tremendous stability, guaranteed growth, and peace of mind. The companies that I work with and other authorized practitioners of infinite banking have been doing this for a long, long time. In most cases, 100, at least 100 years. In some cases, 150 years plus. So you think of them as private financial firms and what they have gone through, all the depressions, recessions, world wars, you name it, in the last 150 plus years. So they have a track record of being stable and continuing to grow and provide the stability. And the liquidity inside of these allows you to seize opportunities when they arise. One of the biggest problems that people have is if they don't have money set aside for opportunities, when opportunities arise, there's nothing they can do about it. It happened to myself and my wife back in 2008 when we got really hit hard, like a lot of people did. Actually, we're in a situation where we had to let go of a 6-unit rental property that we had. And after that, coming out of 2008, was a tremendous opportunity to buy multi-level rental properties at a discounted price. But we were not in a position to take advantage of it because we didn't know about this and we didn't have the savings and liquidity set up and ready to go when opportunities arise. So it's a huge, huge component of this. It's not just savings for a rainy day, it's part of it, but it's also having that liquidity for opportunities when they make themselves available. So if you're ready to take control of your finances like Sarah did, I've got a free resource for you. It was on the original page on LinkedIn, the 3 critical reasons of why becoming your own banker is a great idea. This guy will walk you through how to implement these strategies. It's a very simple sort of guide to it. And if you want to dig a little deeper, feel free to reach out to me. And remember, as I always say, your money, your rules. So thank you. Have a great weekend, and we'll catch you next time. Be well.